Hello, it's your dividend friend. Thank you for coming to my channel. Today's going to be pretty interesting. Do you know anyone that's on a fixed income, SSI, SSDI, anything dealing with the fixed income? I want you to go ahead and share my page to them. I think they're going to really benefit today. But I need you to give me a moment. I need to go grab their chart. I'll be right back.
But you know I'm a stranger, all willing and able.
Okay, I have my trusted chart. What I've done is that I transcribed everything on the large chart so you can actually see their whole entire situation. This is a pretty interesting individual because I think a lot of us know someone who's on a fixed income, SSI, different kind of things, maybe a pension. And maybe you kind of think, well, I'm on SSI. I can't do velocity banking. Yes, you can. The answer is yes, you can. As long as you make more than you spend, you can still do it as well. And with this individual person, I'm going to tell you, her and I had a good conversation. She's not a homeowner, so she couldn't use a HELOC, a home equity line of credit. She didn't want to go on the credit cards because, as you can tell on this chart, I'm going to show you, she's got into some credit card debt. We've all been there and done that. And she doesn't have the savings to do it. But she has pretty decent credit. So we discussed and we talked about her options. You know me, I'm just a voice, but you always make the choice. She decided to take out a personal line of credit. She's able to acquire one for 11.5%, which is great. People might say, well, that's kind of high. But I want you to know, when it comes to a personal line of credit, there's no collateral. Like with the HELOC, there is going to be a house collateral. What this is not. So the risk to the lender is higher. So he's going to charge a higher interest rate. Still a pretty good rate. She has a pretty good credit score, so it helped her. I know that some credit scores, while you can still get a personal line of credit, you're going to pay for it. So I'm going to encourage you to keep your credit sound because good credit, it just speaks volumes and you can actually get more and do more with good credit. But anyway, moving on. In her situation, I want to show you her income. I'm going to show you what we worked out for her strategy. And I think the cool thing is about it is that she's not looking at paying a credit card for 5 years, knowing that they're going to take all that interest and she's going to pay probably an extra $4,000 or $5,000 for the $7,896 that she's in debt. But anyway, let's turn our attention to her chart. Here we go. Her SSI is $11.54 a month. Her pension is $14.75 for a total income of $26.29. Now look at her living expenses. I have it indicated in the red. Notice that she's put now what, $22.47. She's doing great because she is actually making and bringing home more than what she's spending. That's always a positive, like I told you before. But I want you to see where she's bleeding at. She's got herself into some credit card debt. She owes Discover Card $7,896. She's putting an additional $200 a month to pay off that debt. Now, can you imagine her just giving that bare minimum right there? It's going to take her at least 5 years to pay that off. But remember, during that 5 years, she's going to give the Discover Card all of that interest payment because they're saying, oh, you're okay. You can just pay us bare minimum. You're going to get there. But they're going to actually get all that money before you get there. She's probably going to give them about $4,000 extra just to borrow that $7,896. So remember I told you that she took out the personal line of credit? We're going to stop her bleeding. Like she said, I'm bleeding. I got to get rid of this credit card. We're going to go ahead and take the $10,000 HELOC that she received. I'm sorry, the personal line of credit that she received for 11.5%. We're going to go ahead and pay off that Discover Card right away. Let's cross it out. We're done with the Discover Card. This is no longer her having to worry about anything. It's all done. But also, when we get rid of that credit card, we're also going to get rid of that $200 a month. And something you guys didn't know was that she only had a positive cash flow of $182. But the minute we moved that Discover Card off, when we paid it off, that $200 became her cash flow. So she gained an additional $200 in cash flow. Really good. Now we're going to use that positive cash flow to run down her debt. Remember, credit card is already taken care of. We use that personal line of credit to take care of that. But now she has to turn her energies towards her personal line of credit to pay that off. The good thing about a personal line of credit is that you only pay the money that you do in your interest on the daily average, her daily average. If she owes she has $10,000 daily average, she's going to put that times 11.5% divided by 12. That is going to equal her interest payment. Hope you follow me there. So think if she only owed $9,000 per month, guess what? We're going to take that $9,000 that she owes times by 11.5%, her interest rate, divided by 12. That's going to give her number. As she moves down and she pays down her debt, her payments are also going to decrease. Because remember, not like a loan is on an amortized schedule. You're pretty much going to pay the same amount every single month. That's how we're tricked because we take out a mortgage, that mortgage payment is going to be pretty much the same year round. It may fluctuate and change because maybe your taxes may go up or your homeowner's insurance policy, but for the most part, it's going to pretty much remain the same payment. And they know that. That's how they trick you and say, you can pay this little bit amount, but you're going to pay it for 30 years. And during that 30 years, they're going to front load that loan interest. We're going to pay back far more than you ever anticipated. So with Velocity Banking, her using this line of credit to her benefit, you're going to see how she's going to pay less in interest. Now, yes, I get it. She's going to pay more in interest. But the way we're going to do it here, we're going to run it down really, really fast. So here we are. Let's take a look at her chart. So we've already taken out the debt tool of $10,000. So her goal now is to use her cash flow to pay back this $10,000. First month, remember, the cost of doing business is here. She's going to have to make an interest payment because she borrowed from the bank, right? 11.5%. They're going to go off what she owes for that month. So since she owes them $10,000, she's got to go ahead and take that, look, times 11.5% divided by 12 equals 95.83. Okay, great. After she takes her 382 and inserts it in, she's got to pay this first. Then she can actually inject the extra, the 286, immediately into her principal. Okay, that's month one. Now, remember I told you that you only pay on what you owe, the interest on what you owe. So because she's at 9,714, we're going to take that times 11.5% interest rate divided by 12. Month two, her payment is going to be $93.09. Okay. Once we take her positive cash flow, we're going to pay the bank their money. She gets to put $288 towards her principal. Okay. You guys follow me? Okay. Month three, same process. Here we go. 382 positive cash flow. We're going to run it down here. Pay the bank their 90.33. Remember, they're taking that 94. That's her daily average that she owes for that month. 94.26 times it by 11.5% interest rate divided by 12. That's her payment. Once we pay that out of her 382 cash flow, we can send 291 directly to that principal. We're running it down, you guys. Look at this. We're at 91.35 that she owes. Once again, cash flow for month four goes in. We're going to stop off here, give the bank their 87.54 for 294 that goes directly to her principal. Now she's down to $8,841. I've given you 1, 2, 3, 4, a third of the year. She's already paid off $1,200 in that time period, right? Now, if you were to run this whole entire rinse and repeat this whole entire process and keep it moving till she's down to completely at zero with her line of credit, she's going to do this in about 2 years and maybe 2.5 months. That's it. She's done. I want to show you something here. The way that her Discover card had her paying it was she was going to pay that thing off in a little over 5 years. So understand when she did it in the a little bit under the 2 years, 2 years, 2 months cycle, she was able to pay the bank $1,351.97. Remember, you guys, because you're borrowing their money, it's a cost of doing business. Here's where savings are coming in at. If she'd have kept on going and doing that 3 more years at a 5-year mark, she'd have given the bank $4,134.39 to borrow to borrow that $7,896 on that credit card. So she was going to pay an extra $4,000 plus the $7,800 that she owed just to borrow the money, 50% more to borrow off of a Discover card. Doesn't make sense. So here she is. Not only is she done paying off this credit card in 2 years' time, and yes, she's lived on a fixed income, as they say, but she's done. She's annihilated that Discover card. She's done. And you know what else that she has? She has a $10,000 line of credit. If she wanted to go ahead and enjoy herself, maybe go on a vacation, it's okay. Take the vacation, because with the line of credit, you can pay and pull, pay and pull. There's no loan there. With the loan, you can't pay and pull. With line of credit, when you pay it back, you have a reserve. It sits up in there. So also something I didn't mention is that understand one thing about when you're on SSI, you do typically receive 2 to 3% increase every single year. I didn't even take that into account. So if she were to take all her extra money and throw even more into cash flow, she'd pay that off even quicker. So the moral of this story is that you can use velocity banking to take and become a debt eliminator for any situation, whether you're on a fixed income, whether you have a high income. Something I learned is that you basically leverage your money and you make it actually work for you. So I've showed you the numbers, I've showed you the charts. The numbers don't lie. And one thing about me is that I'm not about gimmicks or empty promises because I don't want them. The next video, I'm going to show you a homeowner who's going to pay their mortgage off. This was a 30-year mortgage off in about 5.5 years' time. You will not believe it, but you have to tune in to watch that video. I'm going to send that out one next. Anyway, until the next time, or I always say until the next chart, I'm your dividend friend. I'm here until you win. Could you please help me to win by sharing this with everybody you know? Because you know what I think, getting out of debt, it frees us up to do a whole lot of different things, and it is a blessing. So let's go ahead and share. Sharing is caring. Till the next time, you guys. I'll talk to you later. Bye-bye.